Joining us right now with some reaction to Bank of America, Sylvia Jablonski is here, co-founder and CIO of Defiance ETFs. I don't know. You don't want to say what Roy Logan said on the air, but what? And that's not. But maybe Brian Moynihan's telling everybody that, given these earnings reports.
Certainly possible. I mean, look, I think that this is a great number, and I think that this is a really positive. It's going to be a really positive reaction by the street on this. I think we'll see the name trading up. I think that the net interest income number was a lot better. We're thinking about higher long-term yields rising should be a better story for loan growth for Bank of America going forward. They're really the top or second loan mortgage bank provider, so that's huge. They weren't hit by the variant. The supply chain issues aren't affecting them. The credit losses that they suffered on profit for last time around look a little bit better this time around with that $600 million increase there. Beat on equities, beat on fixed income. I think that this is a great number for the street.
So, of course, now the big question is, if you could own one of the banks, and if I only allow you to own one, which bank do you want?
Yeah, great question. I think I'm going to go for Citi just because it's so cheap. There's a 7.2 PE, which is less than, the 12 number that's the average for the industry. And I think that, that's a recovery story there. So I think I'd probably just go for Citigroup just because it's, in my mind, a deep value play and a super cheap stock to buy.
In terms of what we're going to hear from the other banks, is there something you can divine from these numbers from Bank of America and then, of course, JP?
I think that the bank earnings are going to be super strong. I think banks are benefiting from a few factors. Number one is the rotation. People have sort of diversified portfolios and gone to these sort of value cyclical types of trades. Banks do well in an expanding economy, which we're seeing here. M&A activity, whether it's SPACs or IPOs, has absolutely taken off. There's been this pickup of crypto trading and custody of Bitcoin and things like that, which I think is bringing new accounts to banks. I think that loan growth is going to pop, and now that stimulus is going to sort of simmer down, the consumers that have amassed all of this savings are going to put it back into their businesses and perhaps get back to the banks for loans on consumer goods and commercial loans. So I do think that the banks are poised well to grow.
What do you think about consumer credit right now?
So consumer credit, I think, again, it's sort of been a number that's hurt the banks in the last quarters just because consumers have amassed so much savings on the side. So I think that once that sort of dwindles and, we see
how much do you think people have saved to the point where, this is, I think, a very big question because it also has to do with employment
trillions
right now.
Yeah, so that's so I think that number actually picks up for the banks because there's $2.5 trillion is sitting in money markets and in savings on the side. So consumers have amassed money. There is this unemployment number, but a lot of those people have received stimulus checks, so we're not seeing those play out. And I think that that's going to pick up in coming quarters for sure.